Good morning, everyone, and welcome. Today, we're diving into a comprehensive exploration of auditing financial statements, covering theory, practical applications, and the important ethical considerations. This presentation is designed as a structured self-study guide to help you prepare for exams and enhance your professional skills. I'm excited to guide you through this journey toward mastering auditing with confidence and integrity. Let's get started. This course offers a thorough and detailed instruction on auditing financial statements, tailored to help you succeed in the final exam. We'll take a systematic approach, covering essential auditing principles, key techniques, and the regulatory frameworks that ensure financial audits are conducted with the highest quality. The course is designed for self-paced learning, allowing you to build your skills and confidence in audit processes and professional judgment at your own rhythm. Ultimately, every aspect of this course is focused on preparing you effectively for the final examination in auditing financial statements. This course is designed around 15 detailed assignments that guide you step by step through the core material, culminating in a final examination. Alongside these assignments, you'll have essential reading materials and additional activities that help reinforce both the theory and practical skills you need to develop. The way the course is structured allows you to build your understanding of auditing concepts progressively, making sure you're well prepared for each assessment along the way. Finally, the final exam will provide a comprehensive evaluation of everything you've learned, ensuring you have a solid grasp of the subject matter. This course provides essential knowledge about financial statement auditing, blending theory with real-world practice. You'll gain a solid understanding of how audits are conducted, why they're necessary, and the principles that guide them. One key point here is the role of auditing as an assurance service. It's not just about checking numbers, but about boosting confidence in financial information. By ensuring accuracy and reliability, auditing helps decision-makers trust the data they use, which ultimately supports the broader economy and promotes financial stability. This foundation is crucial for anyone looking to understand or work in financial auditing. In this course, we'll cover several important objectives. First, you'll gain a solid understanding of key auditing facts and the frameworks that guide our work. This foundation is essential for anyone involved in auditing. Next, we'll dive into analyzing financial statement information with the technical skills needed to interpret data accurately and confidently. We'll also explore the core values and ethical standards that licensed auditors must uphold, which is critical for maintaining trust and integrity in the profession. Then, we'll walk through the sequential steps and specific tasks involved in conducting a thorough audit, so you know exactly what to expect at each stage. Finally, we'll take a close look at the concepts of independence, objectivity, professional skepticism, and ethical behavior, and how these elements differ yet work together to ensure high-quality audit outcomes. Each of these objectives will equip you with the knowledge and skills to excel as an auditor. Auditing is essentially an assurance service. Its main goal is to give stakeholders, like investors, regulators, and management, confidence that the financial information they're relying on is accurate and trustworthy. Auditors independently examine financial records to verify that the statements truly reflect the company's financial position, how it performed over a period, and its cash flow situation. This independent verification helps reduce uncertainty and builds trust in the numbers reported by the organization. Auditing is essential because it enhances trust in financial reporting, ensuring that the information presented is accurate and reliable. This reliability reduces information risk for users, meaning investors and other stakeholders can make decisions with greater confidence. Furthermore, auditing plays a key role in fostering efficient capital markets by promoting transparency and accountability. It also supports investor confidence and helps companies comply with regulatory requirements, which is crucial for maintaining market integrity. Ultimately, all these factors contribute to broader economic growth and stability, highlighting just how important auditing is in the financial ecosystem. Auditing comes in several different forms, each serving a unique purpose. The main types include external audits, internal audits, compliance audits, and operational audits. External audits are probably the most familiar. They involve independent auditors from outside the organization reviewing financial statements to provide an objective opinion on their accuracy. On the other hand, internal audits are performed by teams within the organization, focusing on assessing internal controls and making sure policies are followed properly. For this course, we're concentrating specifically on financial statement audits, which are all about verifying that financial reports are fair and accurate according to the relevant standards. Understanding these distinctions helps us appreciate the specific role and scope of the audit work we'll be exploring. As auditors, critical judgments are a key part of the entire audit process. We constantly evaluate whether the evidence we've gathered is sufficient and appropriate for the conclusions we need to draw. We also determine materiality thresholds, which guide us on what's significant enough to influence decisions. Additionally, assessing risks is essential, as it helps us focus our efforts on areas that could have the biggest impact. These judgments are not isolated, they shape how we plan and perform the audit, ultimately influencing how reliable our final conclusions will be. The areas where our judgment plays a crucial role include checking if the evidence meets the necessary standards, deciding on the right level of materiality, and thoroughly assessing risks throughout the audit. Understanding these aspects helps ensure the audit is both effective and trustworthy. When it comes to audit reports, understanding the types of audit opinions is crucial. These opinions reflect the auditor's findings on the financial statements. An unqualified or unmodified opinion is the best outcome, indicating that the financial statements present a fair and accurate view of the company's financial position and performance in all material respects. A qualified opinion suggests there are some exceptions. Maybe certain accounting principles were not fully adhered to or there were limitations in the audit scope, but overall, the financial statements are still fairly presented. On the other hand, adverse opinions are serious. They indicate material misstatements that undermine the reliability of the financial statements. Finally, disclaimers occur when the auditor simply cannot form an opinion, often due to insufficient evidence or significant scope limitations. Each type of opinion carries a different level of assurance and has important implications for stakeholders relying on the financial reports. The judgments auditors make play a crucial role in shaping how credible the audit report is perceived to be. When auditors apply sound, well-reasoned judgment, it strengthens the confidence that stakeholders have in the report and the decisions they base on it. On the other hand, if those judgments are flawed or lacking sufficient evidence, it can seriously damage trust. Stakeholders may then question the reliability and usefulness of the audit report, which ultimately impacts their willingness to rely on it. So, the quality of auditor judgments is really at the heart of maintaining both report credibility and stakeholder trust. External audits are independent assessments carried out by auditors who have no affiliation with the organization under review. The main goal here is to provide an unbiased evaluation of the company's financial statements. By doing this, external audits help ensure that the information presented is accurate and reliable. This process not only boosts the confidence of stakeholders, like investors and regulators, but also reinforces the company's accountability. Essentially, external audits serve as a critical check that promotes transparency and trust in financial reporting. When we talk about credibility in capital markets, one of the most critical elements is the role of external audits. External audits provide assurance that the financial statements presented by a company are accurate and reliable. This assurance is essential because it helps reduce information asymmetry, meaning that all parties, especially investors and creditors, have access to trustworthy information. When financial data is verified through an audit, stakeholders can make more informed and confident decisions, which ultimately strengthens trust and stability in the market. When we talk about value addition through auditing, one of the key benefits is the efficient allocation of resources. Credible audits provide transparency and protect investors, which in turn helps resources flow to their most productive uses. Another important aspect is enhancing transparency. Auditing ensures that financial reporting is clear and accurate, which not only supports compliance with regulations but also boosts investor confidence. Audits also play a crucial role in deterring fraud by offering an independent review of financial information. This helps protect stakeholders and maintain trust in the company's operations. Lastly, auditing strengthens corporate governance by making sure companies follow rules and ethical standards, which goes beyond simply verifying numbers and adds significant value. When it comes to audit planning, the first crucial step is really understanding the client's business environment. This means getting familiar with how their industry works, their specific operations, and any external factors that might impact them. Without this understanding, it's hard to identify where potential risks might lie. Next, we perform risk assessments. This involves looking closely at different areas of the business to spot where misstatements or errors could happen. These assessments help us prioritize our efforts and focus on the highest risk areas, making the audit more effective. Finally, all this information feeds into developing a tailored audit strategy. This strategy is designed specifically for the client, ensuring that our audit process is not only thorough but also efficient. By planning carefully, we set ourselves up for a successful audit that adds real value. When gathering audit evidence, auditors rely on several key procedures to ensure a thorough and accurate review. These include inspections, where documents or assets are physically examined, and observations, which involve watching processes or activities as they happen. Both of these methods help auditors collect first-hand information. In addition to these, confirmations play a crucial role. This involves obtaining direct verification from third parties to validate balances or transactions. Analytical reviews are also important, as they help auditors identify patterns, trends, or any inconsistencies by analyzing financial data over time. Finally, auditors must carefully evaluate the evidence they have gathered. They assess whether the evidence is both sufficient in quantity and appropriate in quality to support their conclusions. This evaluation is critical in forming an accurate opinion on the financial statements. During the audit execution phase, auditors carry out the procedures we've planned to gather the necessary information. A key part of this is testing internal controls to ensure that the organization's processes are working effectively to prevent errors or fraud. At the same time, auditors meticulously analyze account details to identify any discrepancies or unusual activities. Throughout this phase, comprehensive documentation is essential. Auditors systematically record their findings and collect evidence, which forms the backbone of the audit opinion. This careful and detailed approach is crucial because it directly influences the credibility and reliability of the final audit report. Once auditors complete their evaluation, they form an opinion on whether the financial statements present a fair and accurate view of the organization's financial position. This opinion is then documented in the audit report. The audit report serves a crucial purpose. It communicates the results of the audit to stakeholders, such as investors, creditors, and regulators. Essentially, it provides assurance that the financial information can be trusted, helping stakeholders make informed decisions based on reliable data. After completing the audit, it's essential to conduct quality reviews as part of the post-audit activities. These reviews help us ensure that everything was done thoroughly and according to standards. Next, we need to carefully address management's responses to the findings. It's important to engage with management to clarify any concerns and verify that corrective actions will be taken. Finally, the follow-up process plays a critical role in maintaining compliance with auditing standards. By ensuring that identified issues are resolved and encouraging continuous improvement, we uphold the overall quality and reliability of our audits. Auditor independence refers to the auditor's ability to make unbiased judgments and decisions without being influenced by any outside pressures or conflicts of interest. This impartiality is absolutely crucial because it forms the backbone of the auditor's credibility. Without independence, the entire audit process could be called into question, since objectivity would be compromised. Maintaining this independence ensures that the audit findings are trustworthy and reliable. Objectivity is a fundamental principle in auditing because it ensures that auditors remain impartial and fair throughout the entire audit process. This means auditors must actively avoid any biases or conflicts of interest that could influence their judgment. They also need to be mindful of any undue pressure or influence that might sway their assessment. By maintaining objectivity, auditors guarantee that their findings and opinions are grounded only in the evidence collected and their professional judgment, which is essential for the credibility and reliability of the audit. Professional skepticism is a crucial mindset that auditors need to maintain throughout the entire audit process. It means having a questioning attitude, where you don't just accept information at face value. Instead, you critically evaluate the audit evidence, making sure you remain unbiased and avoid placing undue trust in any source. The purpose of this approach is to help detect any inconsistencies, omissions, or misrepresentations in the financial statements that might point to material misstatements. A skeptical auditor constantly challenges assumptions, checks the reliability of information sources, and stays alert for any signs of potential fraud or errors. Ultimately, this mindset is vital for ensuring the accuracy and integrity of financial reporting, which is the cornerstone of trust in the audit profession. Ethical behavior is the foundation of trust in auditing. It's what gives credibility and reliability to financial audits. Licensed auditors are required to follow strict professional codes of ethics, like those set by the AICPA or IFAC. These codes highlight key principles such as integrity, objectivity, confidentiality, and professional competence, which guide auditors in their daily work. By adhering to these standards, auditors help build public trust, protect their independence, and ensure fairness in financial reporting. It's also essential for auditors to avoid any conflicts of interest and to keep client information confidential. Ultimately, audits must always be conducted with fairness and transparency, no matter the situation. This commitment to ethics is what maintains the integrity of the auditing profession. Coopersmith's supplemental activities include interactive learning modules that really help deepen your understanding of auditing principles and techniques. These exercises simulate real-world scenarios, so you get to practice applying auditing standards, identifying risks, evaluating evidence, and making sound professional judgments. The activities use diverse methods like case studies, quizzes, and practical tasks, which all contribute to developing critical thinking and problem-solving skills, key abilities for conducting thorough and effective audits. This hands-on approach not only strengthens your grasp of theoretical knowledge but also prepares you for the challenges you'll face in actual auditing practice. Overall, these exercises ensure that you're not just learning concepts but also applying them confidently and effectively. This course features a well-structured series of 15 assignments that combine in-depth readings with hands-on auditing tasks. These assignments cover a wide range of topics, from analyzing financial statement items and assessing internal controls to planning audits and evaluating findings. The learning process is designed to be progressive, helping to reinforce theoretical knowledge while simultaneously developing key skills like data analysis, documentation, and reporting. These practical skills are essential for anyone pursuing a career in auditing. By completing these assignments, you'll not only be well prepared to succeed in your exams but also gain valuable experience that will ready you for real-world professional auditing engagements. Throughout this course, we've taken a deep dive into auditing theory, thoroughly examining the systematic audit process and the ethical principles that uphold professional practice. We've highlighted key audit practices, including understanding the main objectives of an audit, applying effective risk assessment frameworks, conducting substantive tests, and ensuring auditor independence at all times. We've also emphasized the importance of critical professional values such as maintaining a healthy skepticism, objectivity, and unwavering ethical conduct. These elements, combined with targeted strategies for exam preparation, create a solid foundation for anyone aiming to succeed in an auditing career. Above all, we've consistently reinforced the essential ethical principles that are at the heart of professional auditing practice. To succeed in the final exam, it's essential to adopt disciplined study techniques. This means regularly reviewing key auditing standards, frameworks, and ethical guidelines to keep these crucial concepts fresh in your mind. Next, focus your efforts on core areas like professional skepticism, audit planning and execution, evaluating audit evidence, and fully understanding the auditor's responsibilities. These topics often form the backbone of exam questions. Practicing with past exam questions and interactive exercises, such as those from Coopersmith, can greatly enhance your problem-solving skills and help you manage your time effectively during the test. Rather than just memorizing facts, prioritize a deep comprehension of the material. This approach not only improves retention but also empowers you to apply concepts more confidently. Finally, maintain a balanced study schedule that allows you to divide your time wisely between reviewing theory and practicing application. Consistency and structure in your preparation will support sustained progress and help you perform at your best on exam day.